Hey, what's going on, ADPI Nation? Kevin Brenner, your host of the Active Duty Passive Income Podcast. And while I am dealing with a smidge of COVID, round 2 right now, it can't keep me down. If you're watching this, I have my emergency. Looks like Gatorade. But today's guest is really kind of well, it's awesome, obviously, but we don't talk about this on the podcast ever, really. And it's hotels. It's like an obvious asset class. Like everyone has stayed in a hotel. You're in the military, you're traveling all around, you're staying in hotels, whether they're on base. Where when I was in the Air Force, it was Air Force hotels, right? And they were just terrible. And then if you're in the Army, they have privatized hotels, which are slightly less terrible. But if you get lucky enough and like the hotel's full, you can get one of those non-availability letters, and then you go and stay like in a nice hotel off post somewhere, and it's nice. So as an Air Force member, the joke goes that we stay in hotels, not the field, and I've had my experience in them, but I've never really looked at it from a business asset. So today's guest, Matty A is his name, but Matt Aitchison is going to be sharing his experience as a hotelier. Am I saying that right, Matt? Hotelier?
Yeah.
Is that the word? Okay. So we're going to be talking about it as a business and as a real estate asset class, and kind of just introducing you to the idea of owning and operating hotels and what it takes, and how viable they are, and maybe something you want to start exploring more, whether it's boutique hotels or whatever. So in the past we've covered short-term rentals, which is kind of like a very miniature hotel, but not quite the same when we're talking scale. So yeah, we'll start with that. But Matt, welcome to the show, man. And let's first talk about your background, getting started in real estate investing. Where were you? How'd you get your start, and where are you now?
Yeah. Well, thanks for having me on the show, man. As many people, who get into real estate, it's a wild journey. It's a wild roller coaster, and there's really so many different paths that you can take. Mine started when I graduated college. I had this expensive piece of paper. I was interviewing for a bunch of jobs that were $30,000 to $35,000, $38,000 a year, and I'm like, man, this just ain't gonna do it. And so I remember one day I was living at home still, 21 years old, just graduated. And I was scouring through Craigslist, and I saw one of those cliched kind of spammy headlines: real estate investor seeks real estate mentee. And I clicked on it. I responded to the ad. Long story short, that led me to a guy that was flipping a bunch of houses. This was back in 2010 when, there were a lot of foreclosures after the financial crisis. And I got my start learning. I worked for free for a year for this guy. We had flipped about 100 houses. I saw that he was clipping about $50,000 a house. I was the one doing all the work. And I was like, man, I think I can do this. And one of my mottos that really has kind of become my life's slogan is, be dumb enough to believe in yourself and smart enough to take action on your goals every day. And I've never been the smartest, fastest, or strongest person, but I am pretty dumb to believe in myself every day. And I am smart enough to take action every day. And that led me to my very first flip. I was 21 years old. I ended up netting $106,000 on that flip. It was the, hoarders, classic, multiple cats in the house. We actually found 6 dead cats in our home once we had removed all the trash. Pretty sad and kind of a crazy situation.
Yeah, I can smell it from the description.
Yeah, I still have that smell in my nostrils. Oh, and it really was a game-changing experience for me from the perspective of, one, realizing how much opportunity there was in real estate investing and kind of actualizing it, feeling like it was really possible for me. But the other side of it was, I had about $5,000 in credit card debt at that time. I think I had maybe $800 or $900 in my checking account. I was still living at home with my dad rent-free. And I funded that deal using 100% of other people's money and still netted $106,000. And that kind of became my focus on flipping houses, which about a decade later, I've flipped a couple hundred houses. I also realized, though, I was only as good as my last flip. It was an active investment. It required me to show up, to find deals, to manage contractors, and to list properties and get them sold. And so I really started to focus more on the horizontal income, the passive income, the mailbox money. And so I started taking some of that money and I started using it to buy single family rental properties. And, 5 years had kind of gone by, and, I built up some net worth, built up some cash flow, but I still, again, had big goals, big dreams. And I was like, man, this isn't going to get me where I want to go when I want to get there by. And so I really started to kind of reverse engineer, well, what is my financial goal? And what do I want to achieve by when? And what kind of investments and assets are actually aligned with that goal? What are those stepping stones? And so that led me more towards commercial real estate. And it ended up leading me to my first commercial strip center, which then led me to my next strip center, which then led me to commercial medical plazas. And I started building up more cash flow and equity through commercial real estate, which then led me to, which we're going to be talking about today, my first boutique hotel. And that was, you don't know what you don't know until you know it, right? And that was one of those things where I got into it and I said, yeah, of course, I know commercial real estate. I'm going to buy a hotel. And man, did I learn a lot in that first hotel experience. And really, it was one of those things where, because it was such a heavy operating asset, a hotel is not a passive income property. A hotel is a living, breathing organism that has people in it and on it every single day. And it's an active operating business. And so when I really got the business up and operating and realized how much hard work goes into this thing, it was one, how lucrative it can be, but two, how much operational capacity it took for me. And it was either I'm going to scale this thing or I'm going to get out of it. And so I scaled that up to 3 hotels where I'm at today, building a 4th one on the Riverwalk in San Antonio. And that was ultimately probably one of the greatest things that ever happened to me, which was getting me into a space that I now learned I'm extremely passionate about, which is experiential hospitality, is creating experiences and environments for people to maximize their life's experience with people that they love and care about. And it just so happened to be that that particular asset and space also has all the traditional benefits of real estate, but just a little bit more that you have to deal with when it comes to the operational side, which I'm sure we'll dig in here today. But it's been a wild journey, man. I mean, if you would have asked me, when I first started real estate, I was starting out, trying to flip houses and make it as a realtor. If you would have said, you're going to be owning hotels one day and, in these investments and these things, I would be like, that sounds nice, but I just don't know how that's going to be possible. Right. And I think for a lot of people that hear somebody's story and they maybe see that, kind of overnight success story, really, it's one of those things that I try and, remind people of. The best things are made in the crock pot, not the microwave. I'm a millennial. I like things to happen quick and fast, but at the same time, the best recipes take time for those ingredients to come together and really create something, magical in the crock pot. And it's the same thing with wealth building. So if you're not clear on what you want to do or where you want to go, that's okay. But the biggest piece of it is, the clarity came to me over time through taking consistent action. And that's what I'm good at. I'm just good at putting one foot in front of the other every single day. You do small things consistently over an extended period of time, and it's going to lead to big results, big strides, big leaps. And so just keeping that in mind, you don't have to have crystal clarity in what you're doing right now. But being in these conversations, I'm a big believer. You grow into the conversations and the environments that you put yourself in and around. And, if you're hanging around 9 people that are saying the real estate market is bad and it's scary and it's too risky and you shouldn't do it, you're probably going to become the 10th person that believes that, and vice versa. You surround yourself with, active duty, passive income, badasses that are making deals happen and talking about opportunities and sharing resources and strategies. You're going to become the 10th person that finds, a way to maximize on those opportunities as well. And that's, the beauty of being in the right community.
Yeah, dude. There is so much to unpack in what you just said. You've been talking for like 8 minutes and it's all been just gold, and I think that the progression and I, as you speak, because we're both Go Bros, right? We're both in Go Abundance, and that's how we met. And it's that what you just said has been echoed across most of the folks who are in real estate who are also in Go Abundance, which is a fair amount, I'd say over 50%. And it's all about the transgression from like, oh, well, I started with a single family, or I started with this. Like me personally, I started with a quadplex and I bought another quadplex. I was like, oh, okay, I can do this. And now I've just jumped completely into commercial real estate and completely different assets. And I'm looking at carbon capture assets. But it doesn't matter about the asset. Well, I had the same thing that you had when I started doing short-term rentals, was like, hey, this is like heavy operations. And yeah, it's great cash flow, but what's my number? How do I get there? And how do I get more horizontal income? And then the world's your oyster once you figure out that horizontal income is really going to be your path to net worth and growth and long-term stability, instead of hustling every day for $1, which you learned in flipping. And then you're like, okay, because I talk to so many investors who never get out of flipping because they're
Yep.
like, they're comfortable and they don't want to, like you said, put one foot in front of the other, and they don't want to get comfortable being uncomfortable in a different asset class because you're stepping into the Wild West. Like, you don't know.
Yep.
At the time, you didn't know anything about hotels, but you're like, well, I did a couple strip malls. That's commercial real estate. You could have easily just passed up on this opportunity to learn and say, nah, I'll just stick with the triple net leases on the strip malls, or nah, I'll just stick to flipping houses, and do that, and just heads down and do that. And sometimes a lot of people will tell you like, yeah, only focus on your strengths and do this. But I think having the perspective to realize, one, what are you most passionate about? And it sounds like you weren't super, after you flipped over 100 houses, you weren't super passionate about
I
it.
wasn't.
You knew that, like you said, your success depends on the next flip. It's always about the next flip, and the one that you just closed. And there's always the pipeline. There's always this. So like, keep the moral of this is keep looking within the asset classes as you grow in an investor. Keep looking to find something that you're truly passionate about, and then scale in that direction. So if it's, if you've done single family and you want to move on to commercial real estate, then yeah, try something
Yep.
in commercial real estate, do it. And then if you want to go and niche down into something even deeper in commercial real estate, do it. Put one foot in front of the other. Do what you did. The example that you're setting for everyone listening to this podcast is insane. All right. So with that in mind, let's, you did the strip malls, which I assume they were like triple net leases, kind of stuff like that.
Yeah, most of them were triple net leases, and the Medical Plaza, triple net lease. All the commercial stuff was triple net lease. And really, obviously, the focus in commercial real estate is how do you maximize income, drop expenses, expand your net operating income based on your cap rate. You force some value into the building.
Yep.
I got good at that, and then I was like, well, I can do this on hotels too. And I'm a big believer in, and some people may agree or disagree with this. I'm a big believer in not staying anywhere longer than you feel like you have to. I wouldn't be in hotels if I just was like, no, just keep doing commercial real estate and just stay in this lane. Don't get me wrong. Staying in the same vein over and over and over again, chopping wood at the same tree trunk, you're going to reap some good rewards. For me, I'm willing to sacrifice some of those rewards to enjoy the excitement and the spice of life a little bit. And that's just the way I'm designed and built. That being said, that's not for everybody. But to answer something that I think is important for probably any real estate investor, and what really led me down this path, was when I first started investing in commercial real estate, I created a passive income plan for myself. And my goal, this was when I was 30, I'm 34 now, I wanted to achieve $500,000 a year in passive income by the time I was 40, in 10 years. And I boiled it down and said, okay, if I could just buy one investment property a year, just one a year, what would that look like for the next 10 years to get to that $500,000 a year number? And for me, it was, okay, I just need to buy one commercial property that nets me personally $50,000 a year. And if I can do that for 10 years straight, I'm going to be at that number. And that's just the cash flow. That's not including the equity and all the other benefits that come along with owning that real estate. And so that's what led me into even exploring whether or not I wanted to look at a, commercial property in the hotel and hospitality space. And obviously I thought it was a lot more passive than it was. And I know we'll unpack that a little bit. But I think for anybody that's listening to this right now that is going, I got a passive income goal, and, I want to achieve that. I think 10 years is a great timeline because you can cover a lot of ground in 10 years. And it also doesn't force you to be so aggressive to make unnecessary moves that may put you in a bad position. And so 10 years, what's your passive income goal? Back that into what do you just need to buy in terms of one investment property a year that meets whatever that financial number is that keeps chipping away at it over the 10 years. And getting clarity on a plan like that, for a lot of people, when you get clarity, it makes it so much easier to then create an action plan. And for people like us, especially for individuals with military background, y'all are disciplined mofos. And
Mm-hmm.
so when you know what you need to get after and you're clear on what it is, then it just becomes a game of execution every day, right? And so I would just encourage anybody that maybe doesn't have clarity on what that looks like, do the simple math on a 10-year investment, back into what's one financial criteria for an asset each year, and start moving the needle forward on that.
Yeah, no, and that's great advice. In the ADPI community, obviously, we call it our we call it our military financial freedom number. If you're listening to this podcast, you've never heard what your MFFN is. I highly encourage you to go and read our number one bestseller, Military House Hacking. You can get it for free on the website activedutypassiveincome.com. But the military financial freedom number is exactly that. It helps you determine that passive income number and actually the number of properties or assets that you need to get that in a period of time. So it's a wonderful tool to go and actually say it takes you from kind of dreamer to action taker, where you're like, oh man, I want to be financially free. Okay, cool. What does that mean?
Yeah.
Okay, well let's put pen to paper and let's figure this out and see how many rental properties or how many assets or income, that passive income, do I need each year, and map that out. And it's super powerful. Matt, okay, so let's talking hotels. So a lot of our listeners are familiar with short-term rentals. Some might be in the Military Short-Term Rental Academy, which we just started our second cohort, and it's incredible. My God, those people are just crushing deals. It's insane. But short-term rentals different from hotels. Yes.
Yeah, I mean, essentially, yes and no. I mean, it's the same model in some capacity, just at scale. I
Yeah.
mean, at the end of the day, that's just the reality of it. It's somebody looking to stay in your asset for a particular reason, generally tied to an experience or travel. And there is customer service that is tied to it. There are certain expectations around what the asset physically should, look like. And there's an exchange of value and money in order for that to, be a result that is a win-win for both parties. And so hotels are very, very similar from that capacity, except obviously operationally, there's a little bit more that goes into it on the back end of things. But my goal in terms of boutique hotels, we knew that there are a lot of rundown mom and pop assets in great markets around the country that big institutional players and hotel players are not going to touch because it's too small. And with prop tech and a lot of the innovation that has come into the hospitality space over the last decade, it's really created some unique opportunities to, run some of these hospitality assets in a much more tech-driven way, which that's my model is, if you want, a high touch experience, you want, the Ritz-Carlton type of experience, we're not going to be the place for you.
Yeah.
But if you want something that is contactless, hospitality on your terms, and great customer service, great cleanliness, awesome amenities with a cool updated, boutique design, we're your place. And so ultimately that was our model. We created a tech stack around that. We made our, model contactless, which actually allowed us to stay open during COVID, which, got some bad PR and got some amazing PR. And at the same time, that was the model, was to create a seamless, frictionless, contactless experience for people. And that was something that, I scaled throughout all three of my hotels.
Yeah. And gosh, and that's something that's so prevalent in commercial real estate, that model of, okay, let's find, because at the end of the day, any operator, I don't care who you are in any business, after you've been doing it for a while, you get complacent. I mean, you just do.
Yep.
And that complacency is where people like you can go and say, hey, let's take over this. And in my example, when I bought my first quadplex, I bought it from a lady. She had owned it for 30 years. She was an elderly woman. She's been a landlady her entire life. She was a landlady in Harlem, moved to Savannah. She was a landlady. That was what she did. She did not have the internet. She was renting these properties in penny savers and listing them in penny savers for $650 a month when they could have been going for $1,100 a month. She had no idea. So that was my opportunity to update the business and put a tech stack out there, if you will. But I just got a property manager and did it very easily. But you kind of redid that. But the point is that these assets are out there. Finding someone who's complacent and who doesn't understand what's going on with the latest and greatest tech allows you to go and take advantage of that, find that opportunity. But the money that they were spending on, maybe personnel to handle things, now that you're contactless, you can go and reroute that money to have an awesome customer service or an awesome this or an awesome that. And pulling those levers is so cool in commercial real estate, because in residential real estate, there's only so many levers you can pull. I mean, you know this. There's only a couple levers you can pull when you have one person living in your house. But in a hotel, you can pull so many different levers to ultimately do what? We want to increase the income, reduce expenses, generate more net operating income. And correct me if I'm wrong, Matt, but hotels trade on cap rates just like any other commercial assets now.
100%.
So it's the same exact game. We increase that net operating income. It trades on the cap rate. We force appreciation. And in your business model, what you're doing is you're forcing appreciation. You're improving the business by introducing technology and honing in on your ideal client, which is not the person who wants the Ritz-Carlton experience. That's not you, but that's okay. You're honing in on that ideal client, and you're marketing directly to that ideal client, and you're getting great business. So while we've talked about all the amazing things about hotels, let's talk about the learning experience, because I think that's good to balance out the conversation.
Yeah, I mean, I think, and to just wrap up on that point, the beauty of commercial real estate in that first year, we increased the operating income by net operating income by 75,000. In our market, hotels that are a little bit more stabilized are trading at a 6.5, 7 cap.
Wow.
So just by increasing that net operating income by $75,000 in that first year, I just forced over $1 million in value into that property. And you can't really do that with single family real estate. And so that was a very exciting thing that, came with that particular type of asset. But of course, there were so many failing forward moments, so many things that, you don't know until you know it. And I ultimately, when we got under the hood of the business, really realized that there's a lot of things that weren't being done that needed to be done and set up in order to really streamline this in a way that could be scaled. Because that was ultimately the main purpose, right? Is I don't want to have to be on that property on site every day, running and operating and managing that thing. And honestly, finding property managers for hotels, there are hotel management companies out there, but generally it's not for hotels that have 50 keys or less. So generally those types of assets are run and operated by mom and pops.
Like
and
they're standing behind the desk, like, here's your key.
Oftentimes, here's your key. Oh, wait, let me go run and clean this room real quick. Oh shoot, I got to go get all the laundry out of here. Right? Like very, very inefficiently run, but that's the way it had to be done in order for it to make financial sense. But many of them, like you said, right, haven't been really open-minded or interested in leveraging technology as it's come onto the scene. And me being a millennial, I've always been an early adopter. I've always been somebody that, believes that technology can create a lot of efficiency and scale, as I've used it in other businesses. And so for me, we really looked at, well, how do we make this a completely contactless experience? Anytime somebody needs to have, customer service, it will be there 24/7. How do we make sure that our product is, crisp and clean and modern and cool, but we're also setting the expectation of we're not here, to be able to, make you breakfast in the morning and all of the things that you might think in a mid-level or a, high select service hotel. And so with that, of course, comes many challenges. What are the best door locks to use? What is the best software platforms to use? And really we had, kind of had to kiss a couple frogs to find the right, the right one. And those were things that were challenging. But in a lot of these assets, the biggest challenge always is going to be people. It's going to be people. If I could run 80% of my hotel from behind a computer screen, which really now with the lighting, with the sound, with the security cameras, with opening and unlocking and, locking doors, we can do 80% of our hotel operations with this particular model from behind a computer. But I don't have a robot that's going to go and, clean the rooms or do the laundry or answer the phone and be customer service. And the biggest challenge has been people, especially when you're in certain markets where, like for us, all my hotels up in Lake Tahoe, minus the one that we're building on the Riverwalk in San Antonio, that's a leisure market. and it's a small labor market. So we're not pulling from big cities. We're pulling from a small mountain town. And with that comes challenges of people not showing up to work, right? Or stealing from you and doing things that, aren't appropriate. So those have been some of the biggest challenges from that perspective is, really creating the right org chart for your asset to still run it in a manner that's profitable and makes financial sense. Because if you don't want to be the one to do it, right, then that's a body that you're going to have to pay, or multiple bodies you're going to have to pay for certain acts and responsibilities on property that uphold your brand standard. And so that was the challenge of going, shoot, this isn't kicking off as much profit as I would like it to. But if I have another 30 doors and then I have another 30 or 50 doors after that, now all of a sudden you can build a model out that has economies of scale and can share in a lot of these, resources and systems and infrastructure that you have set up, which is ultimately what I ended up doing. I got the second one. We rebranded, refreshed, reintegrated the tech stack and relaunched that. Did it on the third one as well. And then it got really sexy and then it got really lucrative. But again, that people problem with staffing was always our biggest challenge.
Yeah, no, and that's such a great point, and it's about right person, right seat, right? Like if you've ever read Traction, which I'm sure you have,
Yep.
and you're, at ADPI, truthfully, we're putting in, the entrepreneurial operating system, right? EOS. I think Marky and the founders are in a 8-hour meeting today on EOS, which I'm gleefully not in. But understanding how that works and making sure, and well, number one, understanding that people are always going to be a part of your business, and no matter how automated you are, whether you're running short-term rentals or whether you're running, like long distance real estate investing and you have a property manager, guess what? That's a human being, and they have to coordinate things and all of this stuff. But understanding that is really critical to running a successful business, because people want different things and you have to incentivize people, and people want to be heard and understood, and you have to, as a business owner, you have to do that, to help folks out, to at least make people happy, but also you're running a business, right? And you need to meet your projections and your revenue. Let's talk about how you're raising capital for these types of deals, and what is it that you love so much about boutique hotels that that you don't get in other commercial real estate assets, like multifamily or something like that?
Yeah. I mean, we can talk a little bit about how, I've structured the deals and got these hotels closed. But really one of the things that I love about, hotel assets and really hospitality assets in general is the experiential side of it. I can't take my wife and my daughters to, my strip center and go and have fun in our liquor store, but I can take them up to my hotels and create memories and experiences that I'll cherish forever. Oh, and by the way, I'm making money and getting tax benefits from it at the same time. So for me, it checked a lot of those boxes where, as I started to build more wealth and financial freedom, it then became more about memories and experiences, and hotels checked all of those boxes. One, I love travel myself, and that's ultimately what attracted me to Lake Tahoe, because I grew up going up to that market all the time. And I'm like, oh my gosh, if I can own, I literally, behind me on my vision board, it was about 4.5 years ago, have a property lakefront in Lake Tahoe. And I'd already owned one of the hotels yet, but it wasn't lakefront. Well, 2 years later, I bought a lakefront hotel right on the water.
Oh, that's awesome.
And to me, that was a really amazing accomplishment, because for me, I really just wanted to be able to build wealth, but in a way that included my family and my lifestyle. I'm a big believer that there's no amount of money that is ever worth sacrificing the people that you say you're doing it for in the first place. And at least for me, it was doing it for my wife and my kids so I could have more freedom, more time, more memories and experiences with them. And this was something that was parallel with that. And it got me to be able to show them what hard work looks like, and taking something that was, not so pretty and turning it into something really cool that not only we could enjoy, but it created a ripple effect of experiences and fun and memories for other people. And that was real impact. And so that's why I got really, really excited about experiential hospitality, and that's opened up so many different doors. Now I'm an owner in a distillery and a bourbon company, and we're launching a barrel investment club that people can invest in bourbon barrels, but also it comes with a membership that's tied to experiential hospitality, staying at the hotels and doing other things. I would have never been able to do that if I didn't have one of those types of assets in my portfolio. So that's kind of on that front. Now, the first one, I'm a big believer in creative financing on flipping houses. I've usually, I would say over 95% of the houses I've flipped have been using other people's money, and I've never used, almost on every flip, any of my own money. And I did the same thing on a lot of my commercial assets. And I did that on my, not on my first hotel, but the second hotel and the third hotel I bought using none of my own money. And ultimately it was finding opportunity in an asset that financially penciled to meet my investment goals, but also that I knew could meet a partner's financial investment goals. Mm-hmm. And when the underwriting made sense on those, I've had a variety of people that have invested with me over, the last 12 years. I've been investing through real estate and not losing people's money and doing what I say I'm going to do and operating with integrity and ethics. And over time, you build up some equity and some trust and, a positive reputation. And so I had a Rolodex of investors that were like, hey, I see what you're doing, with this hotel. If you got another one, I'd like to invest in it. Well, as time went on, I built up more and more investors. And eventually I found somebody that had a pretty strong balance sheet and pretty good chunk of equity sitting around. And they said, I'll fund your second hotel. And we did it. And we used an SBA loan. The beauty of SBA loans on hospitality assets is an operating business tied to a real estate asset. So we used a 7A loan. I did 2 7A loans on the next 2 real estate assets. That person qualified on the loan with me. They put up all of the funds and we split 50-50 after they got paid a certain pref on their money invested. And so out of 2 of 3 hotels I was able to buy with none of my own money. And I'm a big believer in finding creative ways to structure deals that are a win-win while minimizing your risk and exposure in the process.
Yeah, dude, I love that. Obviously the idea of using OPM, other people's money, but getting into the nitty gritty and sharing how you've literally structured those deals. So these are joint ventures.
Yep.
So first of all, someone might say, well, why didn't you syndicate these deals? And syndications are great. I've been involved in many, but at the end of the day, if you have someone who has a strong balance sheet and you're just dealing with one partner, it's so much easier to just handle one partner, one joint venture, one deal than it is to have, 100 investors or whatever, 50 investors or 45 investors and all of this stuff and going through the whole process with the SEC and making sure you're legitimate and doing all of that stuff, which is super, super important. But for you to just build up trust and equity in the space and put your money where your mouth is on that first hotel, because you did. You stepped out and you said, hey, I'm going to try this and I'm going to do it. And I have my vision and I'm going to put it forward, and found success. And then people start coming out of the woodwork and saying, oh man, I'd love to do the second one. I'd love to do the second one. The right person comes along and they're like, yeah, not only would I love to do it, I'm in, and let's talk terms because I have all the money that you need.
Yep.
And that's the crazy part. What I've learned as a real estate investor is, and as I progress and become a more prevalent real estate investor and grow my net worth and all of this stuff, is I thought it was hard. And Matt, think about this when you were going back to the beginning of the story, when you were 21, applying for jobs, having $900 in your bank account for a job at $38,000 a year. Was it, I've realized that it's harder to have money and place it to not be taxed than it was when I was like a first lieutenant or a second lieutenant or something, just fresh out of college and had this job. And I was like, oh yeah, my life is pretty easy now. Now I'm just like, oh God, what do I do with all this money? It sounds like,
no doubt.
It sounds crazy. It sounds crazy. Cause like, 10 years ago, Kevin was like, shut up, you idiot. Like, just spend it. But now I'm just like, no, man, you gotta put it in the right asset that makes sense, and finding the partnerships and all of that. It's just a different challenge, a good problem to have, albeit a different challenge.
Yep.
And, dude, I love how you structured that. So it's, again, to recap, it was, that your partner puts up the money in the SBA loan, and a 7A loan is a great loan product. The downfalls of the SBA is they take a while, can take a while to get done.
A lot of red tape.
A lot of red tape, but you get a pretty good interest rate. You get, what is it, 25 years on the term, I believe. It's pretty long term. So you get a pretty good interest rate. You get a 25-year term, and usually you get it. There's a lot of other benefits to it once you kind of get through the red tape. But yeah, I mean, 50-50 deal. They put up the money, and it's 50-50 after a certain pref, which makes total sense. I mean, they want to get cash flow from their investment, and then you guys split. And it's super simple. And my number one tip for advice for people listening to this podcast, and I'm curious if you echo this, I always run the KISS model when it comes to partnerships. Keep it simple, stupid. Just keep it simple. Like when I got started, I had all these complicated like creative finance partnerships, and then I was like, dude, just 60-40 or whatever you want to do, 70-30. Like that's it. No frills. What do you think about that?
Yeah, I mean, obviously, the simpler the better, right? And that's why, on syndication, I probably wouldn't have gotten 50-50 split if I were to go and syndicate that deal versus, somebody that was willing to, partner with me, keep everybody else out of the way. 50-50 made a whole lot of sense. And then it was, making sure that the operating agreement or the, joint venture and how it's structured all made sense. But again, like you said, keeping it as simple as possible is always going to be the best way. I'm a big believer in plan for the worst and hope for the best. And so just making sure that, whether it's in your modeling and your pro forma, instead of blue sky, I'm always underwriting for worst case scenario. Mm-hmm. Instead of, a partnership being amazing, I'm thinking about all the potential, downfalls or pitfalls that could potentially happen and trigger some poor or bad event that, might create some hardship in the partnership, right? So thinking about all of those things and then just distilling it down to something as simple as possible that you guys both can agree on and move forward on is definitely the right approach.
Yeah, love that. Real quick before we get into the bonus round, just kind of wrapping up this conversation on hotels. We talked about, the great benefits of it, obviously, cash flow and everything like that. We've talked about some of the, hey, it takes people. You can't be doing the laundry and running the front desk at the same time. Let's talk about the tax benefits. How is this different from other real estate?
I mean, it's not too different in terms of commercial real estate. You've got obviously, cost seg and the traditional tax benefits that come with traditional real estate. Here's where hotels is a little bit more advantageous. You can run a significant amount of expenses, lifestyle expenses, through hotels. So, and this obviously has to be something that is discussed and agreed upon with, the partnership. But when you think about every piece of furniture, clothing, travel to any hotel or destination that can be used as a business write-off for R&D or for furniture or fixtures or equipment, there's a lot of benefits that come with hospitality that you can leverage in terms of write-offs that you just really can't get from other certain real estate assets.
Oh, that's super interesting. Yeah. And I hear my wife talking about that all the time. FF&E in her meetings. I was like, what the heck is FF&E? And she's like, it's furniture, fixtures, and equipment. I was like, oh, okay, sorry. But yeah, that's super interesting. So being able to go and run certain expenses through your business that you just wouldn't be able to if you just had a long-term single family rental or something. You're not going to be able to run, travel to other hotels and call it R&D, but you can. Wow, that's huge. And ultimately, that's going to reduce your tax liability on the business, which is going to get, guess what, passed through to you. And you're going to reduce your tax liability on yourself. So while enjoying your life and spending time with the people you love most. Man, that's awesome. All right, dude. We've been talking for a while, and I love this conversation, but it is time to take you to the bonus round. Same 4 questions we ask each and every guest on the podcast. Are you ready?
Let's rock.
All right. Question number 1. What book or software is really killing it for you lately?
ChatGPT-4.
Let's go. Yes.
Our entire team is obsessing over it. We're having masterminds on it. Our content curation, our website copy, our newsletters, all kinds of stuff are going to another level. And it's just saving everyone so much time And if anything, our quality is improving. It does 80, 90% of the, heavy lifting for us. And we're coming in and doing the last 10% ChatGPT for all day long.
Yes. Yeah, we use Jasper at ADPI and ChatGPT as well, and it's just super incredible just to go and type something in. You never know what you're gonna get, and it's yeah, we're constantly optimizing it, and it's a game changer for
Oh yeah.
content. Absolutely. Um, that's dude. I need to get personally. I need to get better on ChatGPT and like take like a master class on it and just like because I'm so content driven that I just love writing it, but then I'll realize that like, oh my God, I just spent 30 minutes writing a post when I bet ChatGPT could have done it in like 5 seconds.
Yep.
Yeah. I'm not ready to give up that power yet, man. I'm just like, but I know I should. All right. Question number 2. Who's your biggest hero and why?
Oh, for sure. It's both my parents. Both my parents sacrificed so much for me. They were, corporate America climbers. And while both of them, pursued that path, they were my biggest cheerleaders in pursuing my dreams in entrepreneurship. And kind of a cool full circle story is, I retired my mom out of corporate America. She's one of the COOs in one of my operating businesses and is just a complete killer. I get to work alongside her every day. My dad retired out of corporate America, got into commercial real estate. We did a deal together, and that ultimately has led him down a path of commercial real estate investing. But both my parents are hands down my heroes in terms of just always doing what they said they were going to do, making sacrifices, for me to be able to, pursue my dreams and being big, fans and cheerleaders that really gave me the confidence to take some of the leaps of faith along the way that I probably wouldn't have done without them.
Yeah, man, that's so powerful. And having someone in your corner like that, whether it's a spouse, partner, parents, whatever, that is something that because it's not all. I mean, we'll both admit it right here. It's not all sunshine and puppy dogs, no matter what real
Oh,
estate.
no,
No
no
way.
way.
Like when you listen to these podcasts, you're like, oh yeah, man, buy hotels and it's so easy. But on the days that that it's dark and cloudy out, you want someone to go and you're questioning yourself and you're questioning why you got into this business and all of this stuff. You want someone to be able to go and bring you back and say, this is your why. Remember your why
100%.
and be that cheerleader. It's so powerful. Question number 3, what do you like to do for fun?
For me right now, it's a season of all about my family. So my two daughters, Elle and Evelyn, they're 5 and 8, and my wife, who's my best friend. I know that, I only have a certain amount of time with my girls, and a good friend of mine, kind of reminded me that we really only have 18 summers and seasons with our kids. And, the early years are, a lot different than the later years. And then there's this pocket in the middle that's like real euphoria. And so I feel like I'm in that season right now. So I enjoy spending most of my time with my kids and, doing fun adventures and overnights and activities every single day. So my thing was, I don't want to, work hard to have fun on the weekends, but I want to find a way to build a lifestyle that 24/7, 365. I've got hard work built into it. I've got a lot of play and family time built into it. I got a lot of me time built into it. I got a lot of grind and hustle built into it. And so right now, a lot of my free time is, outside of my normal responsibilities is spending time and doing fun activities with my kids.
Yeah, that's awesome. Yeah, that's the dream, right? And that's the dream for military families listening to this. When you're the greatest thing that I've learned about transitioning from the military to entrepreneurship is that recapture of time.
Yeah.
Because when you're in the military, you got to go when you got to go, where you got to go, and there is no ifs, ands, or buts. It is not a question. It
Yeah.
is not. They're not asking you; they're telling you, and having that freedom to go and say, you know what, actually, I kind of want to live here. I don't want to live in wherever. Pick any random base. I want to live here where I am, and I want to do what I want. And recapturing that time has unlocked so much more internal creativity,
Yep.
health, wellness, being in great community like with you, Matt, and GoBundance and so many other amazing men. It's it's incredible, just
There's kind of a
incredible.
couple different levels of freedom that I look at, the beauty of what passive income can unlock for you. And it's the first level for most people is just financial freedom. Like, hey, I can pay my bills. I got a little freedom here.
Mm-hmm.
The second piece of it is relationship freedom. Like now I have the freedom to literally spend time with whoever I want, whenever I want. And then kind of the third tier of that is impact freedom. Now that, I've got financial abundance, I've got relationship abundance, I've got ultimately the ability to make a difference in other people's lives, whether it's giving money away or spending my time however I want to. And so that's the beauty of passive income, man, is it really gives you choices and options. And I think that's what everybody is attracted to real estate for, is maybe you're not so passionate about one particular asset class or, real estate itself. It's the outcome and the option that, when you do these things right over an extended period of time, what it unlocks for you.
Yeah. Oh man, that is that is incredible. I love that nugget. And now I get the opportunity to ask you for 3 more nuggets. Now we can count that as one. But can you share, Matt, 2 more nuggets of wisdom, just what you've learned transitioning from single family house flipping, where you were actively flipping houses way back when you answered that Craigslist ad, which we didn't even really touch on, which is an incredible story in its own right, but we don't have time to touch on it. But that'll be for the second time you're on the show, Matt. But can you share 2 more nuggets of wisdom, just making that transition to commercial real estate and hotels and what that's unlocked for you?
Yeah, I mean, I think, going back to one of my life's mantra and earlier statements, and I would encourage everybody, is to have that belief in yourself and just be dumb enough to like truly bet on yourself, no matter what the odds say or what somebody else tells you is, a good or a bad idea. Like, just being dumb enough to bet on yourself every day. If you're going to go down this path, you got to be dumb enough to believe in yourself every single day, no matter what obstacles or challenges stand in your way. And then you just got to be smart enough to take action every single day. And you may not have all the clarity that you need, but it's through that action that you're going to gain that clarity, and you're going to start connecting dots, and all the puzzle pieces that were kind of shoveled around on the table. Now all of a sudden you're going to start through that action, through that belief, putting those puzzle pieces together in a way that starts forming a picture that you can go, okay, I can see this, I can move towards this. And that picture may evolve into many different pictures, right? But I think dumb enough to believe in yourself, smart enough to execute and take action every day is a key for anyone that I've seen be really, really successful. The other thing that I would say is, I'll give you 3, just so we'll leave that one back there.
Round it out.
Is imposter syndrome. Every time I've looked at leveling up into an area that I didn't have any experience in, we all feel like this, who am I to buy a commercial property? Who am I to try and build a hotel? Who am I to invest in a distillery and, try and scale an alcohol brand? I don't have any experience there. I'm living at home with my dad. I have $800 to my name. Who am I to try and buy a house from somebody when I've never even bought a house ever? Mm-hmm. And, I think the beauty of imposter syndrome, instead of it knowing that it's there, because I still feel it all the time. When we're in rooms and conversations that we're in, Kevin, sometimes you're like, dang, these people are killers. Like, I don't know if I deserve to be in this conversation.
On the inside, like in Tahoe, I'm just going to go get coffee.
Right.
And slinking off to the back of the room.
And here's what I would say to anybody that feels that imposter syndrome is, 1, you're not alone, first off. And anybody that's massively successful that says they've never felt like an imposter is lying to you. But the other side of that is, I would look at that as a positive, because I think imposter syndrome, ultimately what results from that is what? When we feel like an imposter, there's really 2 paths that you can take if you feel that way. You're going to lay down and you're going to play small and you're going to run in the other direction. But that's not you. So let's assume that you're the second person, which is that imposter syndrome is going to be something that inspires you and challenges you to step your game up and close the gap in whatever area you feel like you're insufficient in, whatever area you feel like you're behind in. And so looking at imposter syndrome as actually an edge and a superpower in people like us is something that I would encourage people to maybe change their perspective on. The third one I would say, and this is something every single person can work on, and every single person will reap rewards from if they do it. We've all been in a conversation. We've all been around somebody. When you leave that person, you're like, damn, I'm inspired by that person. Or I really like that person. I want to be around them more. Maybe I want to be their friend, or I want to learn from them. And that's what I call the likability formula. And as I've gotten into more conversations, I've had more experiences, I've had more opportunities presented to me, I'm like, who am I? Like, why am I getting this? And a lot of the feedback has been, I just like you. I just want to see you win. And I'm like, So then I started over the years distilling that down into like, well, how can more people become more likable? And from all the feedback that I've gotten, I'm going to give you a simple little formula that I think you can be intentional about in your relationships that'll make you more likable. In turn, you'll get more invites into cool conversations. You'll get more invites to do awesome things with awesome people. You'll have more opportunities come your way just because you're likable. And that formula is number one, confidence. You may not know it all. You may not be the best at it, but you're confident in yourself that you can figure out how to close the gap in some way, shape, or form with number two, hard work. Everybody respects somebody, no matter who you are, when your work ethic, when your grind, when your hustle is at such an impressive level that it's like, man, I respect the heck out of that person. And number three is humility. No matter how successful you are, no matter how much money you have in your bank account, no matter what accolades or achievements you have, that you still show up with this level of humility. One of my first mentors always told me is never read your own press clippings. Show up every single day like you're the stupidest person in the room who's willing to work the hardest and wants to bring the most value. And when you do that consistently over time, and that's truly how you show up, confident yet humble and willing to work your ass off, good things are going to happen and you're going to be a lot more likable in the process.
Man, we should have just started the podcast and ended it earlier with that. Well, I know where our reels are going to come from. Dude, that was so awesome and so inspiring. And the likability thing, I couldn't agree with more.
Yeah.
And you kind of put it out there, and that's kind of what I've been living my life by for as long as I can remember, but I never really kind of put it out there. But the confidence and the work ethic, and it's so true that when you work hard, people notice, even if you think people aren't noticing.
Yep.
And then the imposter syndrome thing is so real. And I'll just piggyback 1 minute on that imposter syndrome. When you are dealing with imposter syndrome, because I've dealt with it, you've dealt with it, everyone's dealt with it, right? As you get uncomfortable, or you get comfortable being uncomfortable, and you're expanding that bubble, right? And you're moving into something new, that imposter syndrome always rears its ugly head. Remember, it's who, not how. You don't have to have all the answers. You don't. You can go and leverage your network or someone else's network and just ask the question and find someone and add value to that person in some way, shape, or form, and you'll figure out how to do it. Everything is figure outable. Nothing is insurmountable. And that's the level of confidence that you need to have in yourself, and not only yourself to hard work and grind, because you need to hard work and grind, but it's what direction you're moving in. Are you figuring it out all on your own? Or are you leveraging the relationships that you've made in the past? Or you're leveraging the relationships of the people in your network and their relationships? Because that's really in the military, we call it the force multiplier. That's really the force multiplier, is other people's relationships and what they can bring to the table to you, and how you can leverage them. And in turn, how you can go, and when someone asks you, Matt, if I ask you for a connection on something, boom, I bet right away, here you go. This is everything I know about this. This is the guy, or this is the girl for you. And making that happen that's really the true currency in business. It's not money. It's relationships all the way. 100%.
All day.
All day. All right. On that note, Matt, incredible episode. Thank you so much for spending your time away from your family with me and with our audience of the Active Duty Passive Income Podcast. For folks looking to reach out to you directly, how can they do that?
I'm very accessible on Instagram and YouTube. It's just my name on YouTube, and Official Matty A on all social platforms. They can listen to the podcast, Millionaire Mindcast. We put out 3 episodes a week, and you can always email me at matty@millionairemindcast.com.
There you go. matty@millionairemindcast.com. That's fun to say. Matt, this has been super incredible, and we're going to have you on again in the very near future. But until then, I'm sure I'll see you at another GoBro event.
Kevin, appreciate you, brother. Thanks, man.
All right. See ya.